the issue of energy, and with prices remaining uncomfortably high, all eyes will now turn to the Red Sea port of Jeddah this weekend. Oil-producing and consuming nations will meet to discuss options to bring some order to the oil market. However, there's some doubt that the summit will result in a meaningful hike in supplies, with the likes of Venezuela and Iran already rejecting calls to pump more oil. So what, if anything, will Jeddah deliver? Analysis now with Francisco Blanche, Head of Commodities Research at Merrill Lynch. Francisco,
Hi.
A lot being built into this summit, but a lot, I'm assuming, already priced into the market. Is there any surprise going to come out of this meeting?
Well, I'm afraid that we are pretty much stuck in the same point, which is demand has been running too fast and we haven't been investing, and we all know what the problems are. So I think probably the best thing that could come out of it is a commitment from consuming countries to essentially try to focus on energy efficiency, and also a commitment on producing countries to expand output and reinvest the revenues that are flowing in back into the ground, into pipelines, oil wells and refineries.
Do you think there's going to be any attempt to sort of cap the price? I was hearing today that maybe the leaders will be looking at sort of 140 as the line in the sand.
Well, I think we could see production increasing a little bit. But again, you know, the Saudis have been pumping out a fair amount of oil over the last few weeks, and you know, I think the crude oil market is reasonably well supplied. In fact, the crude oil market in the front months is showing a shape of contango, which means the spot price is trading below the forward prices. In other words, crude oil is going back into storage at these levels. It's not being taken over by the refiners.
Do you think there's going to be any finger pointing when it comes to the speculators?
Well, speculators are always easy to blame, simply because it's hard to prove. It's hard to disprove that there is absolutely no link. But in fact, when you look at the evidence in close detail, which is what we've been doing in the last few weeks, there's really no evidence that points to speculators bringing prices higher. In fact, what we find is whether it's open interest and price rises, or trading volumes and price rises, or index investment in various commodities versus non-index commodities, or exchange-traded commodities versus non-exchange-traded commodities, we just can't find the impact of speculators pushing prices higher. And I think most of the academic literature would agree with us that speculators tend to be benign forces in markets.
There's increasing geopolitical tension, apparently, in the Middle East. We have Israel reportedly carrying out war games, which could be a prelude to some sort of attack on Iranian nuclear facilities. This is a factor we haven't had to think about for some time. This is only going to be bullish.
Well, I mean, geopolitics are always bullish for the oil market. Remember, we are at $135 a barrel, and we have seen no geopolitical problem yet. So clearly, if there is some attack or some geopolitical disturbance over the next few months, prices could become a lot more volatile, and that's unfortunately the crude reality. We've moved up to 135 only on the basis of supply and demand fundamentals, and it's, you know, if we get a shock, a geopolitical shock, the market will be shaken quite dramatically, I think.
Francisco Blanche, let's leave it there. Thank you for joining us.